Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Jordan Berry. How you doing, Jordan?
I'm doing awesome. How you doing today?
Doing great, doing great. Well, glad to have you on the show. This is an interesting topic for me, so glad to have your insight in here. Tell the listeners a little bit about your background before we begin.
Yeah, so I was a pastor actually for almost 15 years, and as I was sort of merging out of that, doing that vocationally, trying to figure out what to do with my life after being a pastor for so long, I kind of stumbled upon buying a laundromat, and that was about a decade ago, and I found myself, neck deep in the laundromat industry, which is a weird little turn in life. Never really knew anything about laundromats or anything. Um, but that has been sort of the playground I've been playing on for the last decade or so, and did not have a great experience, which we can talk about, getting into the business. And it led to me sort of starting a platform to help people get into this business the right way the first time, and helping people who are already in this business to improve their business and achieve financial freedom.
Nice. So, what was it that caused you to get into the laundromat business in the first place? It's kind of a weird thing to get into out of the blue. So, what what
Yeah.
what drew that?
Yeah, it's definitely weird. Sometimes I just like look around and be like, is this my life? How did I get here? This is weird. But yeah, so when I was getting out of ministry, we had a little bit of money in the bank. I live in Southern California here. We had a house here, and I had a great idea, what I thought was a great idea. I had the idea to put our house up for rent here in Southern California, take the money we had in the bank, go buy a condo on the beach in Hawaii. We had two young kids at the time. My wife and I had two young kids at the time. And I thought that'd be a great idea. And we could do sort of whatever jobs in Hawaii for a while. And then when our kids were school age, we could, if we wanted to, come back to California, net gain, condo on the beach in Hawaii. I thought that was a genius idea. My wife said we could do that, or we could buy a laundromat. And it sort of was a little bit out of the blue, but essentially, her family had a family friend who worked a high paying tech job in the San Francisco Bay Area, and high paying, but working 70, 80 hours a week. And he ended up buying a laundromat and replacing his tech income with the laundromat and working about 5 hours a week. And so we thought, you know what? Yeah, that sounds really good. Let's do that. And so that's the direction that we tried to go. And again, it didn't go that way for us, but that was the intention behind it. Income coming in, very little input of time going out.
Wow, that sounds like the perfect investment. So,
That's right.
so tell us a little bit about what happened. Why I mean, obviously most people when they get into things don't go perfectly, but tell us a bit about that experience. Like what happened?
Yeah. So, so just to kind of preface it all, like I was super naive. I knew nothing about business. I knew nothing about investing. I didn't know anything about real estate. I didn't really know anything about stocks or anything, nothing. And so, when I was looking at laundromats to buy, I did as much research as I could, but this is a decade ago. There really wasn't a whole lot out there on how to buy a laundromat, what to look for, what, red flags to look for, and then what to do after you own them. And so I, pretty much relied on one of the two people that stood to benefit from me buying a laundromat, which was the broker. And it just turned out that broker did not have my best interest in mind. Was just trying to pawn off a laundromat to me and sold me on the dream of I'll show up once a week and collect quarters and the money will roll in, and everything will be great. And this laundromat that I bought, it's what we call in the industry a zombie mat, a fixer upper. And it just took a whole lot more time and effort and money to turn that thing around than was advertised. And I just didn't know any better. And there wasn't really anybody else that I could lean on to figure out that this was not going to go the way the broker told me it was going to go. So ended up losing thousands of dollars a month for almost 2 years. So it was a real punch in the gut. Went from, you know, the goal of money coming in and very little time going out to I spent a whole lot of time trying to turn this laundromat around, and no money was coming in. In fact, money was going out. So pretty much the opposite of what we were looking for.
As the old saying goes, when money and experience meet, they are exchanged.
That's
One with
right.
money exchanges money for experience, and the one with
That's
experience gets the money.
that's right.
Yeah, that's well, it's interesting. So I imagine you learned a ton from that first year or two
Yeah.
from the zombie mat. So what happened after that?
Yeah. So before I was done learning, I did learn a lot, for sure. But before I was done learning, I bought another one. And that one also went a little rough. And it wasn't as bad as the first one. And I thought I had learned all the lessons, and I was like, okay, I've learned, you know, six figures worth of lessons now, so I'm good to go. I'm not making those mistakes again. And I didn't, but there were more mistakes to make. So it was another little bit of a rough one on the second one, but like I said, not as bad. But I picked up a laundromat with real estate with seller financing on that one, and it, like I said, initially was a little bit rough also going in. And long story short is a brand new laundromat got built like a half mile away. And it cut into revenue pretty quick. And because of a extended escrow period, I did all my due diligence on the front end. I didn't redo it on the back end, and so I didn't know that was happening. So, anyways, all that to say, more lessons to learn. But I also got the real estate, and it was a seller finance deal, so there were some redeeming factors to that one. And then, after just a long period of time, a couple years of just sort of grinding it out, trying to turn this business around, business sort of started turning around. And as I talked with more and more people who either were interested in getting in the business or who were already in the business, had a similar experience to mine, I started realizing, look, there's a lot of blood, sweat, and tears and money that went into learning these lessons. So I should just share the lessons I learned. Nobody should have to learn the lessons I learned the way that I learned them. And so I started, a platform to just kind of help people learn how to get in this business the right way, and started sharing sort of my lessons, and then started sharing or asking other people to share their lessons through the platform. And that's sort of kind of how it's been going ever since.
Nice. So how many laundromats do you have now?
So I've sold off uh, the the few. So I bought a few and I've sold a few now. So I have one right now, but with the intention of I'm putting together a fund to go up and roll up a bunch of laundromats right now.
Okay. So what do you see as an opportunity in the laundromat space at the moment that you would need a fund for?
So it's what's interesting is this industry is very much a mom and pop industry right now, and it's been so slow moving, keeping up with the times. Like we're just now sort of catching some steam on digital payment systems, like credit cards and loyalty cards and things like that. But sort of the technological advancements, which had been nearly non-existent for decades, are starting to finally catch up to a point where I don't have to go around and collect quarters at all, 15, 20, 30, 100 laundromats anymore, which would just be a nightmare. But you've got digital payment options now that, can allow that to be much easier to manage. You've got remote management capabilities of starting machines, getting error messages from the machines that allow sort of maintenance issues to be taken care of promptly without you having to necessarily be there all the time. You've got software coming into the space that allows you to manage a larger portfolio, and keep track of everything and everyone who's a part of that. So I just see that there's a lot of things sort of converging right now, where the industry is actually starting to grow up a little bit. The mindset of like this, you know, put as little money as possible into the laundromat. And when people think of laundromats, they think of like dingy, half the lights working, half the machines working. They're 30 years old. That was sort of a badge of honor in this industry. And that mindset is starting to shift, and people are starting to see that investing in the communities that their laundromats are in, investing in those laundromats are actually pay off for them. So all this stuff is sort of converging to make it possible to be able to own a larger portfolio of laundromats.
So talk about some of the, I mean, what does a typical laundromat cost? Like what are some of the numbers that you've seen, like industry, not specifically, but just like a range for kind of like what the industry is?
Yeah. I mean, you can get them all the way from, you know, relatively free. I mean, you're going to need to put money into a quote unquote free laundromat, but you know, all the way up to $1 million plus. You know, what sort of an average is maybe 350 to 500 is what you're looking at for an acquisition without real estate.
Okay. What does that typically spin off in cash flow?
So the here's what's really intriguing about a laundromat if you buy it correctly, and that's the big caveat that I missed when I was getting into the business. But if you buy it correctly, the average laundromat deal, this is an average base hit deal. You're looking at a 20 to 25% return on your money, and that's unleveraged. So if you utilize a loan to purchase that laundromat, those returns, cash on cash returns or net income, can go up pretty significantly. So on a $200,000 laundromat, you should be netting 50,000, give or take,
Okay.
40 to 50.
And then, is this the kind of business where it's more static, or is there room for growth in a single laundromat, or how does that work?
Yeah. So what's really interesting about this business is, you know, it's such a simple business, right? And the main concept behind a laundromat is you're essentially leasing out equipment, and other people are coming and doing the actual work of the laundry on your equipment, right? And paying you to do it, which is really nice. And that's the self-serve model. So ways to scale this business are add locations, because you are in on a self-serve model, you're pretty limited uh, to a tight radius around your laundromat that you're going to be drawing customers from. So adding more locations is one way to scale. Another way to scale is to add the service side of the business. So that's like a drop-off laundry, a wash, dry, fold, or a pickup and delivery service, which expands the radius, increases the price point, and when done correctly, increases the margins actually also of your laundromat. So there's a few different ways that you can run this business, kind of to suit the goals that you have for owning a business.
Now, how does this, I know they're different businesses, but is this something that could be connected with like dry cleaning, or is this completely separate?
Yeah, it can be for sure. There's definitely people who own sort of combo dry cleaner laundromat shops, for sure. And they are pretty different businesses. A lot of the sort of environmental concerns that come along with dry cleaning aren't there for laundromats specifically. And a lot of laundromats will, if they have a service side, especially like a drop off or a pickup and delivery, a lot of them, if they don't have a dry cleaning service themselves, they'll partner with a local dry cleaner, and so they'll accept dry clean orders and then outsource it to a local dry cleaner partner.
Okay, interesting. So, um, what's the amount of time that somebody would need to be able to put into this? Because it sounds like it's a lot of time. I mean, maybe not on a daily basis, but it sounds like a lot of time is being put into the business.
Yeah, well, part of it depends on your business model. I mean, I think if you have a self-serve laundromat, that doesn't have, drop off laundry or pick up and delivery laundry, then I think, you know, after you get things sort of set up and running the way that they're supposed to be running, you're probably looking at 5 hours a week, maybe 10 hours on some weeks, but probably around that 5 to 7 hours a week. If you have the service side of the business, the pickup and delivery, and the drop off, it takes a little bit longer on the setup side to get that running. But again, sort of depending on how much you scale, if you can hire a manager, that takes a whole lot off your plate. If you don't hire a manager and you've got to manage those employees, that adds a little more. I'd say, if you've got employees doing all of the driving, the laundry processing stuff, you're still probably in the 10 to 20 hours a week range. If you're driving or processing laundry, then obviously that time commitment can get a lot higher. That's not the goal, I would say.
Okay, cool. Now, is this something you find, you said this is more mom and pop, or are people typically owning like one laundromat, or are there any like, aggregators or institutional laundromat businesses?
Uh, so not no, not I would not say there's any institutional ones at this point. I think that's coming pretty quick for our industry. I think that's coming down the pipeline. It's like I said, the margins are really good, and technology is finally there to be able to manage a larger portfolio. But I mean, there are people that own, 20, 30 laundromats. I know of one guy slash sort of company that owns about 90. That's the most I know of. But yeah, there's a handful that own 20 to 30 laundromats. But by far the majority of laundromat owners own 1 to 3 laundromats.
Okay. So is there a reason that they stop at like 1 to 3? Or because I would think if you're making 20% returns a year, there's no reason why you wouldn't just keep, buying more.
Well, once you get above that, if your stores are all coin stores, which still the majority of laundromats are all coin stores, it becomes a lot to man. I mean, you got to drive to all your stores and collect all the coins, a couple times a week. And once you get above like 3 to 5 laundromats, kind of depending on how big they are, that becomes pretty time consuming. And especially if they end up getting spread out over a decent area. So it just becomes more difficult to manage. But like I said, the people who are utilizing the tools that are now available to us are able to manage a whole lot more than that. But it hasn't been as easy to do until semi recently, last few years, I'd say.
It's interesting. I would have thought that it would have been more technologically advanced by now. I mean, it's not like they just invented credit card machines. I mean,
No,
I
yeah,
remember, God, it must be, I mean, I don't know, it was 20 years ago where they started putting credit cards in vending machines. So
yeah.
why is it taking so long for the industry to evolve?
That's a great question. I mean, I think part of it is there. It really was a badge of honor and is still for some owners to like, hey, I have machines that are 30 years old. It has not been typically this business has not been run very professionally, I would say. So there hasn't been a lot of reinvestment into the business, and so because of that perspective on business, I think just the integration of a lot of the technology just didn't happen because there wasn't really a market for it. But now there's sort of, as people are looking for, cash flowing investments more and more and looking for that freedom that cash flow can bring, a lot more savvy investors and business owners are coming into this industry. And so now there's a market for it and it's starting to grow, with these digital payment systems.
Hmm. Interesting.
Yeah.
Yeah, I just the amount of roll-ups we've seen across different industries in the last 15 years from private equity, I'm shocked that this hasn't happened. If you're getting, 20, 25% returns,
Mm-hmm.
would have thought this would be a no-brainer. But I guess if it's not a technology-based company, they're not interested.
Mm-hmm.
Um, so one thing I'm curious about is, are you seeing the demographics of the market, the users, change at all? Because I would have thought as we get wealthier, more people would have washer and dryers in their house instead of having to go to a laundromat. If you're in a college town, that's one thing, or if you're in a city where it's really compressed and there's no room, that's certainly another. I know when I was living in the city for a bunch of years, there was a laundromat right down the street, but it's an area where the units, like the part of the city, people had small units or apartments, so they didn't have room for that. But as people build newer units and more, high end units, those are all in there. So how does that demographic, is it shifting? Is it the same, or what's going on there?
So we're seeing a couple different things happening. Number one, I mean, I think the demand for self-serve laundry has not really waned. Actually, I know that they're building a lot of apartment, units with either in-unit washers and dryers or a little bit nicer laundry rooms than you think of when you think of an apartment laundry room, typically. But a couple things happen. So number one, the typical demographic is the below median income household for self-serve laundry, and they're actually not really getting wealthier. And so that population is still there and still, by and large, has a need. So a lot of those, I call them luxury apartments that have in unit things. That's serving a different demographic than what the laundromat is serving. So that the self serve demographic is still there. It's still very strong. It's still across the country and urban, suburban, and rural areas. Still there. But the other thing that we see happening is that service side of the business is booming right now and is gonna, I think, continue to boom for a while. Nobody likes doing laundry, similar to the way that nobody likes mowing the lawn, pretty much. And you know what? Most people around me these days, they don't mow the lawn anymore. They have gardeners. And I think laundry is going to go the way of that at some point in time. Now, whether they ship it off to laundromat pickup and delivery or drop off services, or they find some other way to do it, I think it's too soon to tell. But I think laundromats are poised to capture and are capturing a lot of that business right now by offering that service. And so that sort of higher income, even if they own washers and dryers, who'd rather not use them. Maybe they're dual income. Maybe they just are a busy family. Whatever the case may be. Maybe they just value their time more than doing their own laundry. They're using that service.
So do you find that this is the kind of business that people do as like an investment, or is this something that people do like full time? Or you're like a full time laundromat owner?
Yeah, both. I've got friends who are in both camps. And what I find a lot of times people are trying to get that cash flow or trying to replace, 9 to 5 income, and they come to laundromats to have sort of that side income. And they're like, hey, it'd be nice to have something to do for 5 or 10 hours a week. But I don't really want to do more than that. And I want the income coming in. And so laundromat's a really great fit there. But a lot of times what I find is that when people come into it with that mindset, they actually sort of catch the bug a little bit and either want to buy more of them, or they see, hey, I can build a legitimate business with this thing and start a service side of the business and grow it that way. Now, that doesn't always happen. And I think both options are available depending on what your goals are and what your needs are. But I definitely see both happening. It's kind of a cool, versatile business in that way, where it can sort of be this side income, side hustle type thing, cash flow thing, or you can build it into a multi-million dollar business.
Nice. Cool. So, as we kind of get ready to wrap it up here, any final thoughts you think we should know about laundromat business, or anything we haven't asked that is pertinent? I feel like this is really interesting.
Yeah. So, listen, like I said, by and large, this is still a cash business, and that makes it, just speaking to anybody whose interest is peaked here, who might want to do a little bit more research into this business. By and large, this is still a cash business, and this business sort of has a reputation, and there's no shortage of money laundering jokes, right, with laundromats and stuff. But the nature of it being a cash business does a couple things. Number one is it's very difficult to verify finances for this business, which can, like in my case, cause you to go wrong and to buy something that's not gonna help you accomplish your goals. That's what happened to me, right? So, and I see that a lot, and the whole platform I have is to avoid that scenario. But the other thing that it does is opens up a lot of creative financing options. So like with real estate investing, I know it's sort of like the mythical unicorn of seller finance. Well, it's actually pretty common in laundromats. But it's common because a lot of times laundromats can't, not always, but a lot of times they can't be financed through traditional financing methods because income and expenses can't be verified easily by a bank, and that makes them more risky for a bank. So, again, that can be a liability like it was in my case, or that can be an asset and allow you to craft some unique financing terms with the seller through seller financing in order to craft a deal that's going to work for them and work for you. So, all that to say, this is an awesome business to get into. Can really help you achieve financial freedom uh, much quicker than other methods, including real estate investing, which I am a real estate investor and I love real estate investing. But in terms of cash flow, the average real estate deal can't touch the average laundromat deal. And if your goal is to leave your 9 to 5 or replace your W-2 income, you're talking cash flow, and real estate's just a lot slower than something like a laundromat. So, but you've got to do it the right way the first time. Otherwise, you're going to lose money, and that's going to set you back. And nobody wants that. So,
Awesome. Well, Jordan, really appreciate you coming to the show. Where can people find more about you?
yeah. So I run Laundromat Resource, laundromatresource.com, and Jordan at laundromatresource.com is my email. So feel free to reach out, ask any questions you want. And if this is something that you're interested in and you decide you're serious, there's a ton of free resources over there. So go check all that out: a podcast, YouTube channel, blogs, there's forums, all that stuff is over there. But if you decide, hey, this is something I'm really interested in, and I want to make sure I get in the right way, we do have a course that you can buy, and it's everything you need to know to get in the right way the first time. All the knowledge you need, but also all the tools and resources that you'll need to do proper due diligence, to calculate the value of the laundromat, all that stuff will be included in that course. So I'll shoot you a link that you can put in the show notes or wherever you put links if anybody's interested in that. And other than that, check out Laundromat Resource.
Awesome. Well, Jordan, really appreciate you coming on the show and sharing your wisdom with us. And yeah, thanks again.
No problem. Appreciate you having me, Kirk.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right, well, that was a great interview with Jordan. Really appreciate him coming on the show. Now into the panel portion of the show where you have our very own Barb Freeberg. Hey, Barb.
Good morning, everyone.
Glad to have you on. We also have our very own Phil Weiss. Hey, Phil.
Hey Kirk, how are you today?
Doing great. Doing great. Well, let's just dive right in here. So Barb, what were some of your takeaways from the interview?
I've been chomping at the bit to tell this story. Growing up, my dad had several very, very successful businesses, and then, a handful of endeavors, not so much. There was the Orange Julius that never really took off, filled with the basement with Orange Julius containers and
Delicious, by the way.
machines. I know. I don't know why it didn't take off. Restaurants were so so, some were good, some were not. Real estate business, very good. But he always talked about this scheme. And he always said, I've got to get into laundromats because they are an all cash business. And it seems like you just set up these machines and go in there and collect the quarters. Long story short, he never actually did it. But when I heard this Jordan episode, I was like, okay, here's the deal. Does it work? Doesn't it work? And my takeaway is any business can be successful. And I thought when he talked about margins, amazing, really good. I think they were like, what, 75%, if I'm remembering correctly. But there's no such thing as an easy business. So I think we can talk about going forward, Kirk and Phil, pros and cons.
All right. Good stuff. Phil, what about you? What were some of your takeaways before we get into the pros and cons?
Like Barb said, any business can work if you know what you're doing, if you run it right, if you understand the time and effort you have to put in, if you understand the cash flow and everything else. This business does have great margins. It's not a business that you have to be there all the time. And I don't know that it's all quarters anymore. I haven't been into a laundromat in a long time, but I assume I know my kids in college, when they first started, they needed coins in the machines on campus. They don't anymore because it's included in something else and they got a card that they can stick in. So I assume that there's got to be something like that because it's not, the dollar or 50 cents or whatever it was when I was living in an apartment. But other than the machine, it's not a capitally intensive business, right? You need the machines, but they should last for a while. Probably not as long as the one you have in your house because people aren't treating them the same. But it's a business that can work just like any other, but you have to understand what you're doing. That's so important. And he talked about not always knowing what the cash flow is. I know that when you have a cash business, not everything gets reported, but I want to see a tax return because at least I know that that's part is real because you're not going to put more on your tax return than you received. Maybe left some out, but you're not going to put any on your tax return that wasn't cash that you received. So that to me is always a good place to start whenever I'm trying to understand any business.
Yeah, it's interesting is that situation comes up a lot when you're looking at cash businesses. This was always growing up. My dad always told me the same thing. Work for yourself, have a cash business. Well, I got half of that. I don't know, there aren't many cash businesses anymore. Um, but we always used to talk about because he had a lot of clients and he's a criminal defense attorney, so I learned a lot. But he had a lot of clients who had cash businesses, and some of the more famous ones were pizza shops, laundromats. Um, Actually, back then there was no really internet, so it was really everything was cash. Like there were very few people had credit cards too back then, so it was a little different. Most businesses were cash business, but if you look at stuff like that, it's like there's a ton of cash business out there. There's fewer now. There's a lot fewer now. But the laundromat one has always been fascinating to me because on the one side, you've got basically this business that you don't have to put much time into, just go and collect the quarters. But on the other hand, I always looked at it and say, who's using a laundromat? like who doesn't have a washing machine nowadays? Aren't they like, $50 for a washing machine? I know I'm exaggerating, but it's not like uh 40 years ago when it was a luxury to have a washing machine. Like, most places have it unless you live in the city, which case you may not have the space, which I would imagine if you have a laundromat in the middle of the city, you probably do okay because a lot of people don't have that. But even a lot of the new buildings that are going up in the city, they all have, washing machine inside. So it just makes me wonder, like, is it the kind of business that is it growing? Is it shrinking? Um, very, very curious about that. That's really never been answered to my satisfaction, um, but I would imagine just like anything else, there's no such thing as a passive income when you have an active business. And I think this lures people in a lot of, hey, you could just set it up and go. And it's like, yeah, just people say that about real estate, but I still get calls at 5 in the morning for a plumber and, calls on the weekends to fix a leaky roof. That's not really a passive business anymore. But Barb, I know you have a background in real estate. It sounds like your dad did as well. Um, what do you see as kind of pros and cons of this type of business?
One of the things that struck me in Jordan's interview was he didn't realize when he bought one of his laundromats that there was a brand new one going up within the region very close by. Now, if I were looking for a laundromat, I'd go to a new one. So you've got to do your due diligence. You have to understand the market. I thought what you were mentioning, Kirk, is really valid is who does use a laundromat? They're selling apartments in my region or not renting apartments in my region that have washer dryers in the units. So what apartment building doesn't have a washer dryer? And like you said, they're really cheap to buy. So the question is, what is the demand for your service? And who is your catchment area? Because you're not going to drive, uh, you know, 10 miles to go to a laundromat. And you have to understand what neighborhood you are in. You have to understand what is the maintenance requirements on those machines. I can only imagine that they're going to break down a lot. They're going to need servicing. They're going to need cleaning. The the laundromat is going to need cleaning and upkeep. You're going to have to do some marketing too. You're going to have to get on Yelp. You're going to have to get good returns. You're going to good reviews. You're going to have to let people know you are there. So I'm not saying buying a laundromat is a good business or a bad business, but there's a lot of questions that you want to have answered before you buy any business. And we were speaking before the show, and I look at owning a business as a wonderful way for an individual to create an income, either a full-time or part-time income. And it could be a laundromat, it could be buying a Subway franchise, it could be buying a hair cutting franchise, whatever. There's a lot of really good opportunities out there. But don't get swayed by the marketing. Don't believe your business broker. You have to get in there, do a market analysis, look at the profit and loss, and then add on a lot more expenses than are listed. And then consider whether the returns and the amount of time you're going to spend are going to be worth the income.
Yeah. Yeah, you mentioned something. I just want to touch on it for a second. The due diligence, and it's funny because when you see somebody selling, my question is always, why should I buy it? Like, why are you selling? Right? If somebody's like 70 years old and they say it's because I'm retiring, okay, yeah, sure, that makes sense, right? Um, sometimes somebody got over their head, which is usually when you're getting a bargain. But if some like middle-aged person is looking to sell, you got to ask yourself why. It could be because like this, like Jordan said, like, oh, the zombie mat, like there was one going on down the street and I didn't know about it. And like those things happen all the time. Like the insider knowledge they know and they're not going to tell you. And as soon as you buy it, you're in trouble. So I think things like that are really interesting, and you don't know what you don't know, but you should always ask why someone's selling. Because when I see the managing partner of BlackRock or was it Blackstone? Yeah, Blackstone selling their GP stake in their company to outsiders, makes me wondering makes me wonder, why should I be the one to buy it if they're selling? Like they know a lot more about this than I do, and if they're selling, it's probably for good reason. So why do I want to be the rube at the table that doesn't know that I'm the rube at the table, right? You know, they say about cards, if you don't know who the rube is, it's you, and I think in finance that happens. So you should always be asking yourself the question, why is this person selling? Is there a reason I'm not aware of? And just be really skeptical. So Phil, what about you? What are some pros and cons of the business, you think?
So one thing I want to bring up, we talked about putting them in different locations. Remember, there's even stackable machines. They can go one on top of the other. They don't take up nearly as much space as they used to. It's very clear. If I was looking to do a laundromat, it's probably harder to get into, but seeing my kids in college, university, you can get into a dorm or something like that and get that business, those are going to get used because they're not in the rooms. Maybe if they have an off-campus apartment, there is one. Most of those have them, but in the dorms, they don't. And I talked about using a tax return. There's another way. I know that there's a relative of my brother-in-law. He bought a car wash, similar type of business. One of the things he did, I remember him telling this before he bought the business, is he went and he watched the business before he bought it so he could see what the real customer flow was. So if it's a laundromat and you go there or go near there, you don't have to be inside, but see how many people are coming in and out. Try and get a feel for what's really happening because, as we said, it's a cash business. People are hesitant to report all their income when they get cash. But if you observe the business, then you can make your own calculations. That's how the IRS catches like pizza places, right? I know there was one near where I live and they got shut down because they didn't pay taxes. Why? Because you went and bought a slice of pizza, they take one and they put the money in the register. You gave them cash for another one. It would go underneath the register and it would never get added. And the guy would sit in the restaurant and see what the people were coming in and out and know that what they're reporting for income, what didn't match what they really earned. So you can kind of do the same thing. So that's an important part of it. This business isn't, there's definitely going to be a need to go. I had a client that looked at one of these. He was told he had to kind of go every day to check it out, like make sure the machines are in operating order, because that is a big thing. If you have all these machines in there and some of them aren't working, you can't get any money from those machines. They're useless to you when they're not working. So you got to be able to go in and check things out and make sure things are in working order. It's not as much time as some businesses. You don't have to be there all the time. That's nice, but you're going to have to remember that you are going to have to go and there are going to be things that are going to go wrong. And if you can't fix them yourself, you have to have somebody that you can count on that's reliable to fix them.
Yeah, it's funny. It, it brings up this idea in college that we had an athletic facility, and uh, you had these bags. You just put the bags in, and they would clean your stuff, and it was basically like, you know, your athletic gear, your shorts, your shirt, and whatever. And you just basically just give them to the guy, and he would clean them, and then put them. I forget, put them back in the. You have to go pick them up. It's like, I mean, that's a hack. If any of you college students listen to that, that's a hack. Put all your laundry in the bag and give it to the athletic guy to wash, and they do it for free. Not suggesting that necessarily will hold up long term, but it's a great strategy. I know college students are always trying to pinch a penny, but it is interesting you make that point, Phil, because you know the machines are going to break. Real estate investors tend to be do-it-yourselfers. They don't want to pay anyone to do the work when they can do it themselves. Every real estate investor I've ever met has done that, and they just they do it themselves because they don't want to spend the money, because that's extra profit that's going to someone else that's not going to them. So you know, really important to understand the industry and where the areas are that you have to really understand well. You don't have to necessarily be able to fix a washing machine, but better be able to find somebody who can fix it cheap. Because if not, you'd be in trouble. I mean, I don't know about you two, but when's the last time you saw a coin changing machine that worked? It wasn't broken or didn't have something stuck in it. Or, I mean, you got to be an expert at those things. Those things break all the time.
In a casino in Las Vegas. last time I saw a coin changing machine that worked.
Oh yeah, I'll bet.
Also in Dave and Buster's. But I gotta tell you, I'm pretty smart, handy, tech savvy. Those things are tricky to figure out how they work because you're not accustomed to using those.
It's funny, when I was younger, my dad knew a guy who was selling coin op machines, like video games. This is back when video games were a thing. And so he was able to get like two of them for our house. We had Pac-Man and we had Defender. And uh, because, you know, they were ours, we weren't putting quarters in them. We were able to look through them. So I'm looking through them, looking through like the coin op, like understanding how it works. And that thing broke all the time, and it was just ours. Like we were putting quarters in it, testing it out. God, that thing broke all the time. It got to the point where I was like, what is going on? And you look at it, you're like, wow, this is pretty crazy intense. Like someone have to have like an engineering degree just to be able to fix those darn things. But yeah. So I don't know. So what do you think, Barb? What are some businesses like this that would be, if not a laundromat, like what are some that would be really interesting to own from your
I
perspective?
like the concept of franchises. I think because you've got a proven strategy that works, not a new franchise, but an existing franchise, if you pick your location well, be it a Subway, be it a hair cutting franchise or something like that, the thing you have to think about that I think is the biggest problem is management. If you're like you talked about DIYing versus management, if you're hiring a manager, every time you're looking to hire employees, that's an extra cost. And it's also that problem of finding someone good who's going to stick around. And so my thinking is franchises can be very, very lucrative. You might think about being the manager yourself, because you can depend on yourself. And of course, that really won't work if you have another full-time job. But I've heard stories or read about like McDonald's franchisees by a couple of McDonald's. Now, those aren't cheap, but hugely lucrative. Hugely lucrative. So there are a lot of businesses that have a proven track record and that will give you support and that can be a really legit way to earn either a full or a part-time income.
Phil, what about you? What are some of the ones that you like?
I like franchises that make a lot of sense. I mentioned car washes before. That's kind of a similar business to this. The advantage that one of the pros that I don't think we touched on of this, the uh, the laundromat, is you don't need a lot of employees. So you don't really have to worry about that. It's kind of a do-it-yourself business app, unless you need somebody to help you with maintaining the machines. But beyond that, it doesn't have to be manned. There doesn't have to be somebody there all the time. So from a margin standpoint, he mentioned some of the margins you can get from these. That's got to be one of the reasons why, because you're not paying anybody else. You don't really need to do that. Beyond that, I do think franchises are an interesting idea. Just have to make sure you understand what the terms are. But they've set their business model. You just want to have a good location and you have some good people working there. I think that's better, especially if you're not overly business savvy and don't understand a lot of the ins and outs, because they'll help train you and educate you on how to run that business.
Yeah, I agree. I think that's an excellent idea for most people that are looking to invest in a business. Franchises make things easier. I will point out, because you alluded to this earlier, Phil, about people, all cash businesses, and we didn't use the word tax evasion, but some of these all cash businesses tend to do that. And what I find interesting is the IRS is really good at catching people like that. So I'm always amazed that people are in all cash businesses because they somehow want to hide income from the government. And I've just had the privilege of working with clients and just seeing what, none of our clients, of course, but just from conversations of people who call us, they're like, "Oh, I want to do this." I'm like, "That's not a good idea." We deal with self-directed IRAs, and I would say maybe 10% of the time that people call us, it's with the idea of like, I want to hide money from the government. And we don't take those people as clients, but you usually have to educate them that you can't. Like, like I don't care what you think how smart you think you are. The government is smarter because they already know what people are doing. Like you said, like they'll just have an agent sit there in the pizza place and just count the number of people come in the door. Car washes, actually, you mentioned car washes, Phil, so I want to touch on this. This is why I wanted to bring this up. You know, if you look at things like laundromats, they can do the same. They can just sit there and count the number of people. Car washes is interesting because most people think, oh, car washes, they'll never know how many people are going through. Well, first of all, they can count. But second of all, what's the easiest way for them to figure that out? The water bill. All they have to do is look at the water bill and they'll see how many people went through. It's really simple. And so that was like, and I'd been talking with a guy who bought a place from another guy who basically got caught for this. So he told me the story and I was like, oh, that's really interesting. That's all they had to do. And he's like, well, the guy was dumb because the secret was you just basically recycle your water. I was like, that's how you get around it. I was like, yeah, but they can still count people going in the door. Anyway, the point is I'm always fascinated with these conversations of people who think they're smarter than the IRS. Because the IRS, if they want to get you, is really easy. There's so many ways they can figure it out, and the self-directed IRAs are also really easy for them to figure it out. And people don't understand because they're not experts in this. And like I said, we're always obviously do everything above board. We always should. And the way I kind of tell people is, look, just because you can do something doesn't mean you should do something, right? Even if you figured out a way around it, doesn't mean you should. Right? Why do you want to go through that? Why do you want to put yourself through that? And at the end of the day, how much money are you really saving yourself? Let's see. On one hand, I could go to jail. The other hand, I could save myself like, a few $1,000s. I mean, Martha Stewart went to jail for a good period of time for what, $10,000? Like it was nonsensical. Why would you put yourself through that? Now, if you're saving yourself $1 billion, okay, maybe there's some balance in there you could figure out. I'm not suggesting you do that, but hey, I could understand, right? But for $10,000, it's just not worth it. It's never worth it. So for all of you who are thinking about that as a business strategy, don't do it. That's my advice to you today. Don't go to jail. Anyway, final thoughts from you, Barb.
I am not bragging, but my taxes are done.
High five.
Yes, I know, right? I am so freaking happy. But what I learned from reviewing my 59-page federal tax return was the only true passive income is investment income, as far as I know. Now, I'm also have a couple of decades investing under my belt, like 4 or 5. And so investing over those decades has enables you through your IRA, your Roth IRA, you contribute regularly to a diversified portfolio, you will build up a certain degree of wealth, which essentially is for your retirement. And those investments will throw off dividends, interest, capital gains that is passive. So this is not a short-term, get rich quick, make money today for your bills strategy, but everyone on the side, regardless of whatever else you're doing to make money, should have an investment program in place, because at the end, when you get to those later years, and believe me, if you're lucky, you will get there, you will be able to enjoy passive income. So I'm Barbara Friedberg. You can find me at Barbara Friedberg Personal Finance, as well as on YouTube.
Thanks for coming on, Barb. Phil, final thoughts from you.
What you both said reminds me of a couple stories. When I first started my business, I had a potential client, and he thought that my fee was a little bit too high. And I had a firm that I was working with at the time that he came through that I also had to pay for getting this client. So I said, I'll tell you what, how about I don't tell this other firm that I became a client? And how about I pay you in cash? And then I won't pay you as much. And I thought about it just a little bit. And my business is just starting. I said, look, I'm a CPA. If I end to report my income, I could lose my CPA license. And this other firm that's referring people to me, they're my business partner. And if I don't treat them fairly, they're not going to be my business partner any longer. So thank you, but you go find somebody else. I don't need the business that bad. And then you talked about passive income, Barbara. And I remember when I was in college and I was taking an investment analysis class. And I was at Rutgers and the business school was brand new. And the business school and the economics department didn't see eye to eye. And I wanted to take a portfolio theory class. And it was in the economics department. They wouldn't let me take it. So I said to my professor, here I am in school. I'm trying to get skills so that when I get out of school, I can earn money. And I want to take a course that will allow me to take the money that I earn and put it to work and make more money. And they won't let me take it. I don't understand. I don't think that's fair. And he gave me an independent study instead, because he said, you're absolutely right. But Barb is right. That's true passive income when you invest. There's not a lot of other work required. I mean, you have to do research. You can't just buy things, and you shouldn't listen to what your neighbor says or the guy down the street or your coworker or anything else. But it's true passive income. And if you make good investments that you hold for a long time, you can make multiples on whatever you invested. So passive income from investing is a great way to go. As for me, I know that experiencing big life transitions can be stressful. And my job is to help empower women facing new beginnings with the financial knowledge and tools that they need to make self-assured decisions. My firm is Apprise Wealth Management. You can download my free ebook, How to Flourish Through Life's Big Changes, at apprisewealth.com/ebook. And you can also go to my blog and sign up. Go to my website and sign up for my blog. Thanks for having me today, Kurt.
Great. Thanks for coming on, Phil. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.